Hey guys, here are some reasons why the AI rally still has legs. So number one is CapEx spending from AI. Majority of companies have said they are going to be spending heavily on AI over the next couple of years. It makes sense. They have to do that or they're going to get left behind. So that's number one reason why this AI rally can have legs still, even though there's going to be haters, people trying to call the top, right? Saying that Nvidia has gone up too much, that I missed it. You hear that all the time. That means the stock can go higher, believe it or not. Okay. Number two is we're still not over leveraged like what we saw in 2021. Okay. Being over leveraged, that means on margin, obviously, borrowing money. And so we're still not at those elevated levels we saw back in 2021. Also, there's a lot of people, once people start talking about how stocks will never go down, they're going to go up forever, that could signal a top, but we're not quite there yet because there's people that are obviously still hating on the rally, saying that it's a bubble, that it's going to pop, right? That the rally can't continue. So that's why, like I said, it can continue. And then also, Nvidia is not overvalued yet. Okay, you've heard me talk about in comparison to Cisco back in the day. I don't think people truly grasp how big Nvidia is, their market share, this Blackwell chip coming out, how much of a stronghold they have on the market, okay, and how far ahead they are of the competition. And remember, once they have these customers in their ecosystem, it's very hard to leave. And remember, their Omniverse division has not even gotten going yet, so that's another catalyst. Yes, you can look at the bear cases too. It's good to look at that, how China, there's strong competition there, right? There's obviously, they're selling different chips there. They're also, they did get into the Middle East, which is a pro, right? Or I should say, uh, strength of the company, right? Getting access to that market is big, but at the same time, there's going to be regulation obviously there because I don't want China to get those chips right the back doorway. So there's always going to be little things, but remember, stocks climb a wall of worry, and especially Nvidia with how many different industries they are getting into with their AI and the dominant lead they have over the competition. This stock, even if it dips after the next earnings report, let's say they do slightly miss on expectations, yes, the stock's going to take a big dip, but that dip will get bought up, guys, because we're talking the best company in the world. And remember, like Warren Buffett says, don't bet against America. Think how many more traders there are now since the pandemic, and think how many traders there are now worldwide who are investing in the US stock market, guys. Because there's a lot of other countries out there that are struggling. The US is one of the safest places to invest in. So remember that too. They're putting their money with the big cap AI names right now. But once an interest rate cut happens, like I said, there'll be more of a risk on rally where the Russell 2000 small cap stocks will finally get their day in the sun. But we're not quite there yet, as you know. But once Powell officially says they're cutting rates, you can wait for that moment. Even if you miss the first wave or the first leg of the rally, no big deal. It's okay to catch the momentum upward, and that rally will probably last for a while, guys. So I don't want you to miss that. We're in a prime environment. Like I said, the last time there was an interest rate cut and a technology boom at the same time was 1995. Look what the stock market did for years, guys. It went on a huge run, and the small caps outperformed from 1999 to about 2008. And that's what I think could potentially happen. This could be like the roaring 20s where stocks went up the entire decade. I do expect that to happen through 2030 at least.